A massive corporate giant, a household name, has just effectively split itself in two. FedEx, the global logistics powerhouse, has officially spun off its freight division, FDXF. It's a move that has sent ripples through the market, caused share price volatility, and left many retail investors scratching their head. Is this a breakup of weakness or a strategic power move to unlock hidden value? Today, we're going to unpack exactly what is happening, why the board have pulled the trigger, and why I'm seeing this as a massive opportunity for my own journey to $100,000. To understand the why, we have to talk about the conglomerative discount. In finance, a conglomerative is a big company that owns multiple, often unrelated businesses. The market often undervalues them because it's hard to predict how one segment will drag down the other. By splitting, FedEx is shredding this discount. So, how did the split actually work? It was a pro rata distribution. So, for every 2 shares you hold in FedEx, as of the 15th of May, you will receive 1 share of the new stock FedEx Freight. But what did this mean for a small investor like myself? Now, I held 1.25 shares of FedEx. Because I didn't have a round number, my fractional interest, that 0.625 of a share, was automatically liquidated by my broker into cash. I didn't miss out on the value, but I did miss out on holding an actual share of the new holding. However, the logic still remains the same. I can take that cash payout and combine it with my next contribution and buy a whole share of FedEx Freight in the open market. It's the same piece of the puzzle, but just reorganized. Now, I have to say, this is not financial advice. This is just my personal take on my game plan. I see an opportunity. I've always respected the solid nature of the freight business. It's an industrial bedrock. By spinning it off, FedEx Freight has more autonomy to drive its own growth. Meanwhile, the new FedEx is a clearer path to innovate in the parcel space without the weight of the freight division. My plan, I'm looking at the market reaction, the volatility, and a chance to pick up my spots. I'm pooling the cash in lieu payments with my regular contributions to buy in the value I see here. I believe when FedEx was one whole entirety, that it was undervalued on the freight side. So now that they have split, you're possibly going to see more value come on the freight side. Plus, there is a very competitive market in the parcel space. Like we have Amazon coming in, they're improving all the distribution, logistics, and everything like that. So it's going to free up the FedEx parcel side to invest more and more into that, and they're going to compete well with Amazon. You might see some really interesting things happening against those two companies in the future. So for me, I want to hold both FedEx and FedEx Freight. I think they really do have a future ahead in the many years that I'm going to continue investing. So that's why I want to hold both positions. They both have their own attributes. Fundamentally, the data of the business and the board, it's still there. The road to $100,000 is a marathon. It's not a sprint. The corporate shakeups like this are exactly why we do our homework. If you want to see how I'm deploying my capital and how I'm building my portfolio through every market twist and turn, hit subscribe button and let's grow it together. I'm Steve Williams and I'm the Dividend Dad.